All right, good morning, everybody. So it continues. Hurry up and wait. It really looked like maybe we weren't going to hurry up and wait. Then we did anyways. So that's what we have. Take it. Pod Gamma came out with their AM edition right before I started. So I'll get that shared. Still looking for what are we waiting on? And if you listen to Bloomberg this morning, they're saying we are waiting for the China talks. That seems a bit simplistic, but don't have anything to argue against it. Either way, it's not hard to define the idea that we are waiting on something. Small caps lead the way again today, only up 0.5%. Japan basically flat with the S&P and the Nasdaq. Hong Kong up 0.25%. UK up the most. I think there's nothing, at least until Wednesday, other than surprise headlines, which we couldn't see coming in the first place, right? We're going to get more auctions today. Kind of a mixed bag. We got the front end earlier in the week. Now we're dealing with, 1 year and 3 year. So you could, run some yield curves. If you remember a couple of years back, Powell had listed one of his favorite curves, and so they started using it every time they'd ask him questions. So he swapped and said he was using a different one, and then they used that one, and they were asking him questions that was going counter to the whole transitory narrative that we were in at the time. And he listed off 5 or 6 different yield curves through the whole thing. And if you kept track of them, some of them were using some really close in data values. 13-week, I believe, was one of them, which is pretty close in the front. Still, other than the auctions today, we got nothing. Maybe whatever we're waiting on is tomorrow, but I just don't see it. So hurry up and wait continues. The idea with hurry up and wait is that we can test the edges of the previous day. We can begin to expand into a megaphone pattern, but we still expect to hold the line and stay within the range. Now that can break with headlines. And we can't see headlines coming, right? We're talking about unknown news rather than the known unknown. If that confuses you, the known unknown would be knowing that we have CPI, PPI, non-farm payrolls. We have a known thing, but we don't know what the number is, right? That's a known unknown. The unknown unknown would just be some surprise headline that we didn't see coming, not connected to an economic event for the day. We do have the president speaking at Fort Bragg, but it'll be at 4 o'clock. So it just misses the market unless he starts early. And tomorrow we've got the Secretary of Treasury testifying. They're not quite sure on the time frame we can see, but he's at the China talks this morning, so he's going to have to leave that, fly back, and testify by tomorrow morning. So we talked about this wedge yesterday and the idea that a rising wedge should break to the downside, except that this isn't a good rising wedge because we got too close, we got too deep into the apex. And the takeaway from this is that it likely won't act as a normal rising wedge would act, meaning it's not likely to break down. It's worth noting that in a typical rising wedge, we can sometimes get a blow off top. So we would go up first and then we would dump. If this is going to act like an unusual rising wedge, not doing what it typically would do, we could get a capitulation dump first and then a rise. It doesn't have to do that, right? It doesn't have to do anything, but just be mindful that this rising wedge, while it should break down, since we've gotten too deep into the apex of it, I'm not looking for a breakdown here. I'm not necessarily looking for anything other than the fact that this is really compressed, and that compressed price will eventually make very large moves, right? That's the give and take of the market. Market just move from compression to expansion. So we're compressed, we're going to expand. The base case on that expansion is to the upside, simply because if this was behaving the way it's supposed to, then we would be going down. And we're not looking for it to do what it's supposed to do. So we can really see the zero gamma line long ways off 59.26 below Friday's low. We are solidly in positive gamma. And for those that don't understand the nuance of this, in positive gamma, if we try to break out, the dealers will sell into that breakout to the upside. And if we try to break down, then they will buy into that selling. They'll buy into weakness, they'll sell into strength, if you want to just remember it that way. Now, once we get below zero gamma, then all of that changes. This matters from the context of above zero gamma, our day-to-day average range is expected to be muted or reduced significantly. If you think about how things were from February, March, April, we had really big days, right? Really big bars, and things got a little wild. Those large bars or large days were in a zero gamma or a negative gamma environment. Now that we're back above that zero gamma line, we're expecting to have more normalized average daily moves. So outliers with velocity aren't expected. Doesn't mean we can't get them, just that it's not the market for that. So they're not pricing that volatility into the day-to-day options market. If you go in trying to price your iron condor or to strategically locate your butterflies, they're not going to, those metrics aren't going to be very accurate because they're still trying to normalize volatility. Of course, it also very likely means that there's not much of a customer demand on hedges either. Now, this isn't really the forum for that, but we can gauge the level of exposure from the client side or the dealer side and see, are they loading up on hedges or not? The takeaway for us today is that we're still above the put wall, we're far above the zero gamma line, and that we're interacting with the volatility trigger with the call wall nowhere in sight. Keep your eye on that put wall as a tell. If it gets rolled down, they're moving it out of the way. Right? Kind of like if you you know you're going to carry something heavy. What do you do first? You walk the path and make sure there's nothing in the way. Clear everything out so that when you come walking through with whatever's heavy, you're not tripping on anything. If they move the put wall out of the way, they're clearing a path. It's a good way to think of it. Today's ADR, as I was just talking about, the ADR is continuing to shrink. This was over 100 for a while. It was like 110, 115. Now we're back below 100 and we're close to getting below 80. Back in the day before COVID, it was at 35 to 40. Imagine that, right? Continue to talk about how much the markets have changed since COVID. And if you weren't trading back then, it's really hard to explain to you how different it was. But that's a good barometer of how different it was. We haven't got to either side because we're basically flat. We're not expected to get to either side either because it's another hurry up and wait sideways day. But the longer we remain in this sideways range, the more likely it is that the move that we get will be significant. There's an old phrase in the market that says, the wider the base, the higher in space. Well, that's for a comment when we're at the lows making this sort of price pattern. We're not at the lows, so bases and space doesn't really fit here. This would be more of a topping pattern than a bottoming pattern. Still, the concept is sound. The idea is the same. Narrow range days start to stack, and when you stack enough of them up, then at some point you get your trigger, whether it's the 5-bar count or NR7s are kind of popular but rare. NR3, narrow range 3. I like to use IX, so inside days. We don't have an inside day at this point since we broke out of yesterday's range, but we didn't keep it either, and we came back in again. And if you notice the charts that I was looking at this morning when I started the stream, we had bonds, China, Europe. This little move that we had with the breakout was felt all over the place. It was in treasury and commodities and markets around the world, but it didn't stick. We came back in. At the very least, we're looking for a liquidity gap close on the second move, right? The first move has already been closed. We came back and we got that taken care of, but we left one back here, 60.32 cog line. Now we don't have to go back and get it. We left one back here that we haven't closed yet either, but I'd mark it and keep it on the radar. Same as this liquidity gap from Friday, which lines up with our ADR low, 59.72, basically. So for the bigger picture, this wide range that we're in, the market's waiting on something. We can't get it out of there before then, but we can define closer in ranges. So we're looking for a megaphone pattern. That's the idea that we start testing the edges and we go a little bit higher than the previous time, a little bit lower than the previous time, so that we start to develop this sort of megaphone shape, right? Now, it doesn't always have to be angled on both sides. One side can be flat, say like a flat top, and then the other side can be angled, or vice versa, flat bottom with a angled top. It's the idea that when we get to the edge and we get that breakout, that we're running on the assumption that the breakout is fake, that we're going to come back in. You don't want to buy the breakout. You want to do what the market makers are doing. Sell into strength, buy into weakness, play the reversal, at least until we get the breakout. I know it's kind of hard to define which breakout's going to be the actual real breakout, but it should come with headlines. It should come with news. It very likely is going to tie to one of our economic events, right? The market knows it's coming, so it's not going to be one of those surprise headline news. And in fact, if we break out from surprise headlines, that should be another tell that it's not the one. Very likely not going to stick. For today, it's fairly simple. We have our own Globex low, which lines up really nice with yesterday's low and a very compressed range. So if you think about what we've already done, we broke yesterday's high, we tested yesterday's low, and we've started from kind of the middle. So that's some violence we shouldn't be seeing this high above the 0 gamma line. If we can break our own Globex low at this point, we'll challenge Friday's price action. Otherwise, we've defined our range for today, and this should be it. Even if we do expand at this point outside of our comfort zone or outside of this range, it should be a 111 reversal on each side, either side, and we just come right back in again. Let's just overshoot that for a moment so we could turn the other lines on. Now, very likely that's it, right? The 1, 2, 3, 6 lines up with the ADR half 60, 53. Just to get to that, we'd have to get to 60, 50 big round options level. Difficult to get through. We got 60.11 cog line, 6,000 at our feet, 59.92 cog line at the low of the day. It's amazing how those levels just keep showing up again and again. So simple. GTFO, get out of this box and make it through the 1, 2, 3, 6 if you want to continue to move. Otherwise, we're looking for a reversal within those two lines and back in the zone again from either side. Doesn't even matter what side. And we're expecting to continue to hold the range just like we did yesterday, till we get whatever data it is that we're waiting on. We got a narrow or narrower channel today than we had yesterday. Narrow channels imply that if we do break out, that the breakout sticks and that we keep it. Well, we tested that theory to the upside and it didn't hold. We're already back in. But this narrow channel says breakouts. It doesn't say topside breakout. It just says breakout. So perhaps if we break the bottom, especially after we've tested it once, then maybe we break out and it sticks and we actually get a run to the downside. Today's floor pivot opened higher than yesterday's. That's bullish. Price opened above today's floor pivot. That's also bullish. We tested it once, broke it once. Now we've crossed back and forth through it. It doesn't have any value left at this point. Because of yesterday's narrow range, our S&R levels for today are fairly tight. You can see we already went through R1 and S1. We almost made R2. So if we do get a breakout of our own Globex range, we've got 60.46 R2. And if we get through the cog line, 59.92 cog line, then we've got S2 below 59.75. Of course, if we get that close, we're going to go to the weekly floor pivot. It's not quite Friday's midpoint, but really close. I think this does a really good job of highlighting our current situation. It's a really nice distribution pattern. Not quite textbook because of this little tail here, but that's all right. We got nothing, right? Really tight range, real nice classic distribution. We're going to cross through this point of control. It has no value to us, the value area high and low. None of these levels are going to offer any insight at this point. The only thing this is doing is showing that price is behaving the way it's supposed to, and that volumes are distributed in a pattern that makes perfect sense, that there's no craziness or outliers, or even this high that we set up here, it didn't come with a large footprint to it. So there is some tells in here with insight, but otherwise we have exactly what we were expecting, a clean distribution. What would have been a surprise would be a very large footprint across the top or a very large footprint across the bottom. That would have been an outlier that would take some more examinations. $10-day, 30-minute volume profile with TPO, we can see a couple of discrepancies here between these two products. The point of control on the TPO is already moved up, and we've got a large distribution here that we really don't have here. I mean, sure, we got a little bump, but it's not the same. We're going to continue to wipe the volume out through today and tomorrow that built this point of control, and then it will shift just like the blue one did over here. Very likely into this 59.88 area, at least at first, and it'll be because of this area. But then we're going to take that out too. So it'll eventually end up here. Now, if we stay where we're at and we continue to build this zone, then that's where it's going to go next. The trick for us is to be above it when it gets there, or at least to be there when it gets there. If we drop back down, say below 59.75, something like that, and then the point of control gets moved up above 6,000, we will be outside of its zone, and then it will be a resistance to us. But if we're already here when it gets there, then we can just cross back and forth through it. It won't be resistive to us. So we either want to be out of this area and higher, or we want to still be here when it gets there. We don't want to be below it. An old VPOC from February. That should say 25, but it won't matter now because we're getting rid of it anyways. We hit it, just done with it. You could leave that one on for the day since we hit it today, but I tend to just take them off the board. We don't have a new one from yesterday since we've crossed through that level multiple times already. There's that outlier that we were talking about when we were out on the higher time frame. Now, we put in some hours across the top, so it's not a surprise to see some distribution there. Maybe a little bit of a surprise here where they tried to save it for some odd reason, but that is a cog line. Imagine that. And then the point of control for today is at another cog line, 60.11. You can see the broadening formation of that megaphone pattern already, right? If you've gone through any OCR type analysis training, one candle reversal sort of OCR. And you kind of worked on this stuff already. The bottom side's really not changing up that much. So as I mentioned earlier, megaphones don't have to be angled on both sides. We've basically got a flat bottom and an expanding top, but it's still the idea of a market that is holding the line and yet testing the edges and pushing a little bit higher, a little bit lower. Eventually, we're going to come out of this. But we're really close to Friday's close. We've gone nowhere on the week so far. And whether you call it narrow range days or IX10 or inside days, whatever you want to call it, GTFO, we got to get out of the box, got to get out of the range. Every day that we sit here, however, is a healing behavior for the market. So the 10's getting closer to us. The mean is getting closer. It's a nice reset and can be considered a correction in time rather than a correction in price. But we didn't really need a correction, so just hanging out. There was some headlines on TSM this morning, a little bit of discussions about front running to beat tariffs, that sort of stuff. More sentiment than anything else, or backwards looking. We can see bonds, Bitcoin, solar, but this isn't the sort of stuff you'd want to see for a breakout and a rally day. And it's not weak. We were just looking at what's red, and we don't have anything on the red list large enough to even consider. Right? Nothing's down at least 0.5%. So we got nothing at this point. We can see the Mag 7 and chips, bonds, energy, precious metals, miners, small caps. Well, even small caps have given it back. They're not even up 0.5 anymore. Now, my bull scan was lit yesterday all day, but it was lit with, kind of junky, forgotten, beaten down stocks. And I mean, just junk. Like Campbell's Soup was up yesterday. Who cares about Campbell's Soup? So markets are moving. They're just not moving the indexes, right? The hyperscalers, that sort of stuff. With the Mag 7 being up this morning, that is a direct impact to the indexes. It'll be hard to see how the Mag 7 gets flows and yet the indexes still don't move. It is possible. We've seen it happen before. But looking at what's down this morning, nothing is down enough. Oh, I'm sure Campbell's cares about Campbell's. Yeah. That's they're on JFK's hit list, right? JFK Jr. He's going after Campbell's and Pepsi and Coke and all those guys. I got a list. So we got nothing. The expectation is that we're going to hold the line. That's the base case. So, don't fall for the breakouts. If we attempt to break out, it's very likely going to fail and we come back in again. Be mindful that, price can do whatever we want, whatever it wants. So we can anticipate that the breakouts are going to fail, that we're going to stay sideways, that we're not going to go anywhere, but we can't argue with, the facts. So if we actually do get a breakout that just runs, give up on trying to flip that thing back in and play the run. I say that mostly aimed at the newer traders. right? That against the face of all odds, if we get a breakout and it just runs and runs and runs, for goodness sakes, just go with it or get out of the way and let it run. I don't expect that. And the only way I think we're going to actually get something like that today would be surprise headlines that we can't see coming. Well, we can't see them coming, so I can't anticipate what those are going to be. But we don't have any econ big enough to do it, and the market's waiting on something. It's very likely something for tomorrow, not today. So GTFO, get out of the box. That's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.